Hello, the company being discussed today is Redington Limited. Here is the logo, at the top, Redington Limited. This is an Indian company and it's a distributor. So basically, it buys products from companies on like credit. It borrows products from companies and then sells them to like other retailers, resellers, some corporate buyers, other customers on credit. It gives them these products on credit and the difference and the price it buys from the original companies, the products, and the price they sell to these resellers and all. The difference between those two prices is their profit. That's what it does. It distributes products from the original product maker to like resellers, retailers, corporate buyers, etc. That's all that it does. So we're going to look at it. We're going to look at this company. Its long-term financials, its cash flows also, a slight look, a small look into what it actually does, a deeper slight look in what it actually sells, its products, its portfolio, how geographically diversified it is, revenues coming from what regions, and revenues coming from what products or product segments. So first, we're going to look at its long-term financials. Here we have performance since listing. Listing as in the IPO. So this company is listed on the stock market. Market cap is around 18,000 crores, as far as I remember. So first we have revenue. All these figures are in crores. So 99,562 crores in overall revenue. So big company, massive company in terms of revenue. We can see the overall growth rate in revenue per year, annualized growth rate is 15%. Very solid, considering we're talking about since 2007. The fact we're talking about from 2007 to 2025, and this revenue growth has been so consistent, that's a really good plus. Then we have EBITDA. EBITDA is known as earnings before interest, taxes, depreciation, amortization. So interest, taxes, depreciation, amortization, these are all expenses. Uh, and EBITDA, 14%. 2007 to 2025, annualized growth rate of 14%. Again, in line with revenue. So revenue has grown and EBITDA has grown both by, it seems, the same amount. It's just PAT, profit after tax. And again, 15%. So revenue, EBITDA, and profit after tax, all of them have kept up at the same pace. They all grow at the same pace. Now, in 2025, we saw that the profits are 1,340 crores, right? 1,340 crores. EBITDA was 2,257 crores. We can see it. And revenue is 99,000 crores. So there's a big gap between revenue and EBITDA. Like if you want to compare 99,000 crores, so 2,257 crores of EBITDA as a percentage of its total revenue comes out to barely below 3%. PAT, it's not even 2%. So profit after tax percentage margin, after tax margin is around 1 point something percent. EBITDA margin is 2 point something percent. So it's a very low margin business, Redington that is, because it's purely mostly a reseller of products. It's a distributor, it just distributes trading of products, a low margin. Moving on, we have more statistics. Now, these are not from 2007. Okay. Earnings per share, 21% from 2020. Book value per share. Book value is assets minus liabilities. So how much has it been growing? The book value per share, 14%. Very nice. Shareholder payout is basically dividends. How much the company has been paying out in dividends. Consistently 39% to 40% of profits. After tax, the PAT after tax, how much money left of that 40% is being paid out in dividends. Not the worst. Return on capital employed, very important metric for efficiency. how efficiently is capital being deployed. And this is in 20%, so a high during 2022 could be a one-off, who knows? And 2025, 21%, not the worst, a bit lower than past years, but still okay. Return on equity, again, this is a more investor-centric efficiency metric. How profitable a company is to its shareholders. So 16.9%, not bad, better than 2021, 22, slipping a bit from 2022, better than 2021, slightly better than 2021, but overall solid. 16.9% return on equity, not the worst. Return on capital employed 20%, pretty nice. All right. So moving on, we have its portfolio. Portfolio meaning of its products. The first is endpoint solutions group. Now, endpoints. What is endpoint? PCs, laptops, desktops, printers, consumables. So, endpoint refers to devices which are like connected to the internet. They're connected to a network. Devices connected to a network, and they are the endpoint of network. So, imagine a network like there's one device connected to other device, and imagine a line between the devices. That's the network, the line. But at the end of the network, the device is the end of a network. It moves to another, it's an endpoint. The device itself is an endpoint. So PCs, laptops, desktops, all-in-ones, printers, consumables, accessories, distribution of these products, PCs, laptops, and all. From what I understand, endpoint solutions, it's just that. It's mostly distribution of these products. Then technology solutions group, again, it's mostly distribution of products, from what I understand. It does include services like enterprise and security solutions, cyber security solutions. But that's extremely small percentage of this total, how much money it generates. The technology solutions group, from what I understand, it's mostly distribution of like products, tech that is oriented towards businesses, tech for businesses like storage, servers, mostly that. This is big. Mobility Solutions Group distributing smartphones. And here, the major client customer is actually Apple. I believe they're responsible for transporting iPhone products. So if you have iPhone India, big chance, Redington, I think, is the distributor to like retailers and shops and all. Cloud solutions, this is the services. Reselling cloud services and managed services. This must be the more high margin, pure services. This is not distribution of products. Then ensure services, gain value adding higher margin services, warranty services, infrastructure management services. ProConnect, this is a subsidiary, from what I understand, it's a logistics company. So logistics, warehousing, transportation, solar products, transporting solar products, and digital printing must be transporting 2D and 3D printers. So this was their overall products, we can say. So a lot of distribution, a lot of tech products being distributed, even solar, and a few services. Like we saw cloud resell, we saw warranty services, we saw ProConnect, logistic services. Next, we have their brand collabs. Who are they working with? Top brands. Honestly speaking, top brands. We got Acer, Dell, we got Apple, AWS, ASUS, and Canon, Google, and some other companies. Okay, SanDisk is there. We got JBL, NetApp, Oracle, Samsung. We got Microsoft, Lenovo, Realme, Huawei. Who else? Who else? Trend, okay, IBM, even S3, S3, Dream. Is that Dream 11? I don't think so. I don't know. Gigabyte. I don't know any company named Gigabyte, but these are its what are the brands? Brand collaborations. The products they're selling. The products like the product makers whose products they're distributing. These are the product makers. They're distributing Google's products, Apple's iPhones. Samsung products, Cisco products, Canon printers, distributing them in India and other very other nations also. They're a global company. And talking about global company, next is their global presence. So here we can see bunch of companies. They're in a bunch of companies, and they mention here the number one or number two distributor across all their markets, and they're number one in India. 32 countries presence, 40 markets they're serving, one or number one or number two across all markets, and number one distributor of IT products, information technology products in India. You can see Uganda, Rwanda, Egypt, Saudi Arabia. So in Middle East also Bahrain, Qatar, Oman. Then we come to Kuwait, Jordan. Turkey is a very important market for them. Morocco, nothing in Europe. Azerbaijan, Kazakhstan, Bangladesh, India, of course. Singapore, another important market. Is that Malaysia? Yeah, that's Malaysia. And of course, South Africa. So a lot of diversification. Again, global company didn't mention Europe. So that's interesting. But a lot of locations, Middle East, South Asia, etc. Now we have the another stat which shows there a lot of concentration. These are the top five vendors. Latest quarter numbers, so latest vendors, the top five companies they're actually getting their revenue from, or you can say the top five companies whose products, when they are distributing, they're making the most money from. So 34% of revenue, from what I understand, comes from redistribution of Apple products, iPhone. Then what is it? Next is 9% HP, 8% Lenovo, Samsung 6%, Dell EMC, so Dell company 6%, Dell products. From redistributing Dell products, they make 6% of the revenue, and 37% is from other companies. So around one third revenue comes from redistributing Apple products. So a lot of reliance on Apple. Yes. Finally, we only have a few more things to look out. One is geographical diversification. So these are from its annual reports, okay? The real annual reports. This is for fiscal year 2025, not the latest quarter, but close enough. So first, let's look at geography. Let's look at geography. Now, 99,333.65 crores in revenue. Of this, 50,045, 50,054, 50,054 crores revenue came from CISA. Now, you may wonder, what is CISA? CISA is Singapore, India, and South Asia. South Asia. These regions, Singapore, India, and South Asia region, contribute 50,000 crores of the 99,000 crore revenue. So more than 50%, slightly more than 50%. And the rest of the world meaning, what is the rest of the world? Middle East, um, Africa. I don't know if they are in the American market. They should be. They did not mention it. But yeah, rest of world contribute another half. So it's basically almost 50-50, like 48, 52% of the revenue split between the CISA regions and the not CISA regions. And here, okay, sale of goods, tangible goods we can touch, like IT goods, 95,000 crores, big majority of the revenue. And like 3,677 crores came from sale of services. That is, no kidding, 4%, 3 to 4% of the revenue came from sale of services. So again, this is a purely sale of goods company. It sells goods, redistribution of goods. That's the majority of its revenue comes from. And lastly, we have one more thing. It's cash flows. We're going to analyze some of its cash flows. Before that, this is screener.com. You can see the financials here, a lot of financials very easily. So 18,000 crore company, 18,500 market cap, dividend yield 2.8%, return on equity, return on capital employed. We already saw this, and current price of 238 rupees. Okay. And the thing to see here is are the cash flows. Now, what are cash flows? Cash flows are, as the name suggests, the flow of cash, right? So, okay, depreciation. Remember that depreciation, amortization, these are expenses, but they don't really affect the cash of a company. These are non-cash expenses. And like while accounting, while you see net profit numbers, there will be stuff which does not really affect the cash flow of the company, the real cash, how much cash is coming in. So cash flows are supposed to show that. So here we have the cash flow from operating activities. How much pure cash are the company's operations making? All these numbers again are in crores. And 2014, cash flow from operating activity 241 crores. 2017, 1,300 crores, big jump. 2019, 1,068. 2021, 3,497. 2022, 989 crores. 2023, minus 3,000 crores cash flow. So in 2023, more cash went out due to operations than it came in. And why? Well, because in business, many times you're selling products, you're selling on credit. Like you let them borrow, you could let them pay, you let the customers pay after 30 to 60 days. And when more is being sent out on credit, you get less cash because you get the payments after 30 to 60 days. You are getting less money now. And that's the issue. So more on credit, you're giving more of your products on credit to customers. You're receiving less cash from them right now. And you can see 1,000 crores cash flow from operating activities and 293 crores. So the only thing I want to show here is the kind of volatility. And we can see here, mostly it's been positive. This is not against the company. Mostly it has been positive cash flow from operating activities. 240 crores and a big jump, 1,300 crores, 900 crores, 3,000 crores. Very nice. Overall, we see it's a bit fluctuating. See massive drawdown here, 1,000 and 200 here. But okay, we have seen it bounce. I'm not saying it won't bounce back, but I'm just saying that overall, it has a lot of rise and falls, big rise and falls, very substantial rise and falls. It can go from 1,000 to 200 crores. The cash flow can fluctuate. So it has a not the worst cash flow volatility. You can look, negative cash flows has only been for 2023. And like what else? Like 2016, 2 years out of 10, we have seen negative cash flows from operating activities. So it is a positive cash flow company and it can generate substantial cash flows from operating activities, but still, it's a bit volatile. That's it. And last thing we can see is interest payments. I just remembered this is the P&L from 2014 to 2025. Hold up, let me just, yeah, 2014, 2025. And here you can see the interest, all in crores again. Here's the operating profit. You divide operating profit by interest, and the number you get is the interest coverage ratio. Higher the number, better. But you can see interest payments. 2014, we had 200 crores. In 2018, we have 100 crores, 190 crores. 2020, 289 crores. 2023, 355 crores. 2024, 517 crores interest payments. 2025, 456 crores interest payments. So a lot of interest, but compare it to the operating profits of 2,154 crores. Operating profits are like 5 times bigger, 4 times bigger, not 5 times, 4 times bigger, 4 point something times bigger. And 4 times interest coverage is very healthy. Nothing to be scared about 4 times. Even here we can see 163 crores in interest compared to 1,800 crores and profit like 10 times. So overall, on the interest side, no big problems. Cash flow is a tiny, eeny, meeny bit. It goes up, goes down, and the highs it has experienced in cash flows are obviously bigger than the lows. We saw 3,000 crores in positive cash flows whenever that was 2023, 2022. There was a 3,000 minus one, but let's ignore that. So that's it for Redington. It's a distribution company. It is India's biggest IT distribution company by a big margin, I believe. So that's it. Globally speaking, it's a bit diversified. A lot of money comes from Turkey, South Asia, Middle East, Africa, and good revenue growth, solid revenue growth numbers. So that's it. Have a nice day.